Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is John Jacobus. Thanks for being on the show, John.
Happy to be here. Thanks for having me, Whitney.
John is the managing director of Juniper Capital Management, an investment firm specializing in owning, operating, and allocating private capital to alternative property investments, including Class C, Class B apartment communities, and mobile home parks in major metro areas of the Southeast and Southwest. John's portfolio has grown over time from key positions in enduring publicly owned companies to include several multifamily properties and mobile home parks. John's investment philosophy is rooted in the principles of value investing, and he considers Warren Buffett and Charlie Munger as foundational figures in shaping his investment approach. John, thanks again for being on the show today. I really appreciate your time and just the expertise I know you're going to provide just from your experiences, and it's been a pleasure to get to know you better, over this past year. And but tell the listeners a little more about you, and in case they've never heard of you. Some of them probably have, but give them a little more about your background and what your focus is right now.
Sure. Yeah. Thanks, Whitney. And so I got started in investing quite young. So started out in real estate, fixing and flipping single family homes in Southern California. Just got into the mix. My dad showed my brother and I a way to, get involved and do something entrepreneurial and build some equity. So we rode the equity wave down in Southern California in the early part of the 2000s. And that just sort of sparked an interest in me in investing in general. I took that and ran with it, ran across the principles of value investing and stumbled across Warren Buffett and Charlie Munger and really opened my eyes to some foundational ways of thinking about investing and ran with that. Got interested for a long time and continue to be in public equity investing, so the stock market, and determining how to evaluate companies, understanding what good is, and assessing what's a good value, and just cultivated a really deep interest in following that, and almost a hobby where learning about different businesses and industries and what is good and what's not so good has just always been an area of focus for me. So that led to sort of a deep interest in investing. And I moved out to New York City about 4 years ago. And that was really the first time that I had been immersed in this kind of environment of multifamily real estate. I got to know my landlord, sort of started probing questions. He and his brother had assembled quite a large portfolio of multifamily assets on the Upper Side of New York. I thought, that's kind of cool. And you've got sort of buckets of free cash flow coming in on a monthly basis. And that'd be kind of neat to explore that a little bit further. So just continue to follow my nose and talk to people. At some point along the way, I got to know you, Whitney, and explored it. And since then, I've gotten involved in being a limited partner in multifamily assets out in the Southeast, and then progressively worked towards becoming a general partner and being more actively involved in raising capital for big projects, and now most recently taking down mobile home parks. So yeah, it's been a long journey over the past 20 years or so. Just always been curious about different investment vehicles and compounding wealth, and either showing others how to do it or doing it myself and exploring new fun things. So
it's incredible to hear how you got started so young. I wish that there had been, somebody to spark this in me when I was a teenager, and I probably wouldn't have listened, but that's incredible when I hear, people getting started so young and learning this business, or learning just the value of investing and learning about what makes a business profitable or not, and just some key things there that I'm sure you learned that you apply every day now and probably don't even think about it.
Sure. Yeah, it's been just years of repeating and doing the same thing. I mean, it's part of compounding, right? Doing small things consistently over time. Well, it may not seem meaningful at the time. It adds up to something you can't avoid. So yeah, I'm awfully fortunate that my dad sort of showed us the path, and it definitely took some reinforcing, and I didn't always get it right. And it was a couple of years of just slogging it out, and I had to make some mistakes on my own. But I just look, I've really been, I'm grateful that was sort of shown this opportunity, and hey, there's an alternative route to slogging it out and working for a W-2 job, for your entire life. And I've embraced that and tried to make it my full-time thing.
Awesome. So John, you've got experience in the stock market, a lot more than probably most people that I know. And then you've also got experience just learning businesses, and you got experience in multifamily. You've got experience as a limited partner, investing passively, and also as a key principal now. But your current focus seems to be mobile home parks, correct?
That's right.
So, elaborate to us, I guess, why mobile home parks? And, you've got, obviously lots more experience than most in so many, in other asset classes and other types of investing. And so how did you narrow down to mobile home parks?
Yeah. So at this point in the market cycle for, commercial real estate, things are hot and it's competitive. And while I still love multifamily assets for, all the reasons that we like to celebrate on shows like this, it's just been very difficult to compete. I live in New York, but I invest in the Southeast and the Southwest. And that physical separation, especially in the large Class C, Class B multifamily, can be problematic. I can't jump on a plane immediately and be there for a property tour in the afternoon. I can't be on site, spending time with brokers to cultivate relationships. And I have limited time. So I have a pretty intense day job. And so sort of looking at things, where's the best use of my time? And when I have time to put forth to something, where do I think I can be most competitive and really make a difference? And so that was sort of the first filter. The other filter is, and this comes from the value investing principles, is I like things that are unloved and unpopular, but have really appealing economics. And I don't know where the origin was for mobile home parks, but I'm pretty sure I was listening to a podcast and one or two of the guests came on the show and talked about mobile home parks. And, at first it was like, okay, I don't need another shiny object to chase. And, I need to focus and really hone in on something specific like multifamily. But for whatever reason, I may have gotten frustrated or said, hey, this isn't really working out in the multifamily space. Can't be far away and compete. So for whatever reason, I latched onto it, did some reading. And the more I dug into it, the more I just fell in love with it. So the things that really shot out to me were, there's this negative public stigma associated with it. Nobody talks about how much, how many mobile home parks that they own, or the fact that they're a mobile home park mogul at a cocktail party, right? That's not something people brag about. That appeals to me, right? Because there isn't hype associated with it in mass. And, it's an inefficient market. So it's about 30, 40 years behind in some cases, most of the markets. There's a few pockets of sophistication in California, Arizona, and Florida, but on balance, it's a very immature industry in the sense that you don't have the liquidity like you do in multifamily. Financing is a little bit more difficult. Just the ability to view deals and the deal flow. There are just some barriers there that the industry hasn't adopted in a way that single family, multifamily, and other commercial assets have. So again, that makes deals or mispriced opportunities much more abundant. So that was also a thing that I liked. Mobile home parks are supply constrained. So you don't have to face the massive overbuild cycles that you do in some of the other commercial assets, because most municipalities across the country don't want mobile home parks built in their communities. So, from the 40s up until now, or until, 20, 30 years ago, there was a build out of mobile home parks. But really in, the past 20, 30 years, municipalities aren't allowing new ones to be built. So that's kind of nice too, when you have a supply constraint and you don't have to worry about some vacant piece of land across from your park being spun up into a new park. And, sooner than later, you've got a competitor right across the street from you. So the supply constraint. And then the third piece is mobile homes are typically, in the model that we pursue, are owned by the residents. So you've got an alignment of interest between the park owner who owns the land and the residents in the community. And that's something that I really like, having been had experience in the multifamily space. Because in multifamily, you're always dealing with residents. And, there are instances where the residents can truly treat it like they don't care and, leave the place a mess. And, a renter is a renter, and they're not going to take as good a care of it as an owner would. Well, in the mobile home park space, if you do pursue the model where you own parks where there are a lot of resident-owned homes, you've got a shared interest and you've got stakeholders in the community. So those were some of the reasons that attracted me to it. The primary being that it was just sort of this unloved niche and nobody wanted to talk about it. And that sort of, those types of things really are like a magnet for me, because it oftentimes means nobody's paying attention and there's value there. So long-winded answer, but it's multifaceted, and there's a lot of cool things about it.
There's some good details there that are very good. I'm glad you went through that. And I find that I'm attracted to things that like other people say are too hard.
Sure.
And so it's like, okay, I'll figure out a way. Let's jump in.
Yeah. It's funny. I'm a distance runner too, and I run marathons, and it was kind of the same thing, right? As I was a kid, I just picked the longest distance, and I said, I want to do the mile. And then it was the 5K, and I just sort of always picked the thing that other people didn't want to do. So it applies to all aspects of my life.
Awesome. Well, let's talk about I know you got a few deals that's either happened recently or in progress, or you got a lot going on, and so let's talk about a deal maybe that I don't know, something interesting happened recently, or tell us about how you found it, and let's go through some of the details of it.
Sure. Yeah. So really, I was sharing my journey about, being involved in multifamily. And that's really where I got started. So as an LP and a couple of properties down in Dallas, Fort Worth, and then sort of slowly took the next step to raise some capital and be part of the general partnerships team. And it just progressively escalated on the activity scale as it relates to multifamily. At some point in late 2017, I said, I'll continue to partner, and I still like multifamily. And, I participate today, but primarily through partnerships. Pivoted in early 2018 and said, okay, I'm going to full bore go in terms of acquisition and prospecting. It's going to be focused holistically on mobile home parks. So, went through and built the database. I went out to boot camp, right? So went out to see Dave Reynolds and Frank Rolfe are two titans of the industry, and they put together a pretty comprehensive training program at once a quarter. I went out to boot camp out in California in early 2018, and so got trained up, learned a little bit about more, and started building out the database. So looking up properties in the metro areas that we were interested in, started going to the county websites, trying to find the owners, and really building out a robust data set that would cultivate some off-market deal flow. At the same time, we were talking to everyone that we knew about mobile home parks, and trying to meet other owner operators, other investors, talk to brokers, went to conferences. Like at every opportunity, we were just trying to put ourselves in the path of deal flow. So 6 months of that, of just lots of energy, but not a lot of result. And until it got to the summertime around June, we came across this deal, friends of ours in New York. So again, it goes back to the unloved thing and nobody talking about mobile home parks. We go to a monthly meetup in Manhattan where a lot of real estate investors from all corners of the industry come. And it's a great networking event. You can meet people. Well, there's about 5 of us among the 150 that show up on a regular basis that are into mobile home parks. Well, so we got to know each other and liked hanging out, and would, keep a virtual and an in-person thread going. And so this particular group had been doing some good off-market work and had a couple of deals under contract, but at the same time, they found it was an opportunity to set up a fund. And as a result, they needed to focus their time and energy on really going through the fundraising process at the expense of some of the deals that they had managed to secure under contract. So, being friends, they said, hey, we've got a couple of good deals, sourced them off market. Would you guys be interested in any of them? And we said, heck yes. So we found of the few, we found this one in North Carolina that really appealed to us. So in June-ish of last year, that contract was assigned to us, and that begun our due diligence period. So that's how we got to our first deal. It was 6 months of just daily struggle and action and sort of chasing all sorts of avenues. And despite putting all that time and energy and talking to brokers and building an off-market database. Ultimately, it was a friendship, and through that relationship that the deal came our way.
I appreciate, though, just pointing out the 6 months of just lots of energy, lots of work, just no return. It didn't look like there was any return, right? On that energy spent or that investment. However, you're still making stuff happen. You're still turning those wheels. I mean, you're still learning through that whole process, every connection you make. And, as you pointed out there, I mean, you never know where these relationships, lead to, where, but, 6 months, I mean, that's really, in the grand scheme, that's not very long.
Not at all. Not at all. Yeah. Look, it goes back to the compounding, right? The daily consistent action and long time horizons and delayed gratification. Like that's just ingrained in me. So, that background of the value investing thing and the Munger and Buffett, I mean, that's just sort of, that's how we roll. So, it was inevitable and just kept charging away and grinding it out. So
how many homes are on that property?
So it's a 70 space park, 50 of which were occupied. So, a couple of things that appealed to us: Fayetteville, North Carolina. So that's the home of Fort Bragg, which is the largest military base in the country. So we like the government presence there because it adds stability to the market. It's also large. So we focus on metro areas in the Southeast and Southwest that are 100,000 population and above, which Fayetteville is about 300,000 people. So large metro area. You've got diversity of employment there. We generally like North Carolina because it's a state that's growing, has a fairly solid economic base. So those were the characteristics demographic wise that appealed to us. For the park, we like value add parks. So value, right? Being value investors, we're attracted to opportunities to create value, buy something for less than what we think it's worth. And so the fact that it was a 70 space park with only 50 occupied, that translated into an opportunity for us to fill in 20 new lots with homes and realize the value created as a result of driving the operating income from that.
I wanted to ask you, like somebody that says, wow, John, you laid all this out. I'd really like to think about mobile home park investing myself. But your first deal was, had 70 homes on it. It seems, like a big deal, is that something I should consider? And I hear it with multifamily all the time. And should I start with a duplex or 100 units or more, and I imagine it's similar philosophy, but what would you tell to somebody that's like 70 units? I don't know, or 70 homes. I don't know about that. Is that similar to mobile home parks as well?
It is. It's the benefits of scale, right? You benefit from scale. Your occupancy doesn't take as much of a hit on 70 units versus 70. You can spread your fixed operating costs across a wider base. Really, for many of the same reasons that it makes sense to go larger initially in multifamily, it also makes sense to go larger initially in mobile home parks. Financing is easier, all checks all the boxes on simplicity. So,
are you tired of answering emails from investors about when they'll receive their K-1s? Let the real estate CPA handle the accounting and taxes on your next syndication, and they'll file your tax returns by March 15th so you can get your K-1s to your investors by the individual filing deadline on April 15th. Not only will this reduce headaches, but it will help you retain investors over the long term by improving investor experience. The Real Estate CPA is now offering a special virtual workshop to the listeners of the Real Estate Syndication Show on how to answer tax-related questions from your investors. Learn more today by visiting therealestatecpa.com/syndication. Awesome. So, keep us like 70 units. What you've seen the value add. There was place to add more units. What was the business plan initially, and how has it gone?
Yeah, so the business plan consists. There are a couple of value levers that we saw that we could pull. So the lot infill was one. So 20 vacant lots infill over the course of a 3-year period, which we think is sort of dragging our feet, but we like to be unreasonably negative on our projections, right? So if it's a low hurdle, we like jumping over 1-foot hurdles instead of 10-foot hurdles. Under market rents. So we saw about a gap of, $15-20 a month on the lot rents that we thought we could very easily push. We validated that by running some test ads in the market, and so we had some reasonable assurance that we could achieve those rents.
Is 15 to $20? Is that a big, like, loss to lease? Is that a big amount in mobile home parks, or is that?
It's not huge, but keep in mind, right, that may not be meaningful at all in the apartment space, but apartment rents are quite a bit higher, right? So 10 to $15 on let's say a 1,000 average apartment rent is, not that meaningful. But the average lot rent across the country is somewhere around $300.
Okay.
So $10 to $15 of a much lower number is much more meaningful on a percentage basis. So we were looking at 10 to 15%, 10 to 20% gap in where we were relative to market in what we thought is an escalating market. So not a huge opportunity on the rent bump, but material and a core component of our business plan. We also saw bloated expenses. So the owner of this particular park had owned it for quite a while, and it had just consistently deteriorated over time. We saw that in the financials. We also saw it when we were boots on the ground doing diligence and talking to the manager, and it's right across the street from the fire department. So we talked to them. So we were able to validate that, hey, this park has sort of been neglected over the past couple of years, and we don't know what's going on, and it's just sort of run into disrepair. So just introducing some professional management, not only from a cost perspective, but just paying attention and doing things and taking care of deferred maintenance. That was another major lever as well. The last thing was this, and this is the thing that at one point repelled us and triggered us to run away from it, but at the same time was the reason for a lot of the value that we saw, and that was a contaminated water well. So there was an issue with the infrastructure, so the private utilities, and such that the water levels were not up to the code of the state. And so that killed the interest of a lot of prospective buyers. But the more we dug into that, the more that we could get comfortable, and we're able to use that as a problem that scared a lot of others away, and we used it as a negotiating tactic to get a price that was appealing, attractive to us.
Nice. Did you find that during due diligence? Or go ahead.
We did, yes. And so just to round out that question, the fixing that was a core component of our business plan, because once we resolve that, then a multitude of financing options with much more attractive terms open up, which would allow us to take out capital and do great things. So yeah, those four things really constituted the framework for a business plan. Yes, we did identify this issue with the well during due diligence. So, our due diligence, similar to multifamily, we look at the market, we look at the financials, and then we look at the physical infrastructure. And this, as part of our physical due diligence, we go to county and or state websites that keep track of health violations. And this particular park, we knew it had private utilities, so it's septic, sewer system, and private water well. And so we checked it. We went to the appropriate governing body, and that governing body keeps records on, health violations. So we pulled up the address, and that we saw there was quite a long history of health violations and notices, and there happened to be one outstanding. So we drilled into that, and I'm not a well operator. I'm not a plumber, right? I'd never owned an asset that had private utilities. So this was definitely a learning curve for me. And so we saw this thing, and immediately we're like, whoa, this is, it's got poisonous water. We don't want anything to do with that. But we, the initial thing was, okay, so how bad is this, right? Is this a deal breaker? I don't know anything. It was radium is the contaminant. Don't know anything about radium. This is at, 6 parts per million versus the 5 parts per million is the max threshold. How bad is that? Is that sort of, instant death as you ingest it, or is it sort of a slow, right? Is it a slow burn? So all these things, sort of floating around, and we had to get our brains wrapped around this. So we spoke to some well operators, some, private well experts. We spoke with environmental attorneys, right? We just tried to round out and assess okay, just how bad is this, and is it fixable, right? Because if it's a fixable problem, that's great, because other people really react negatively to surface level things like this. I mean, that could be scary, right? Poisonous water well,
Yes, very much
contaminated
so.
well. Don't want to hear anything else. I'm not interested. On to the next. Well, for us, let's take a look, right? Is this a fixable thing? How much is it going to cost to resolve this thing? If things were to go, what's the worst case scenario? If it really to go bad, what does that mean? Are we going to be on the hook for all the historical issues, all the claims, prior to our ownership? Is there some limits on our liability? Can we buy insurance to cap some of that risk? So those were all the things that we were going through and trying to assess, okay, do we really know how bad is and what that would translate into? Assign a probability to that, and then look at the upside. And then on balance, it's the risk reward balance, and does this make sense to go forward? Well, so at the time, we did all of that, and we ultimately said, no, it doesn't make sense to go forward, because it was at a price, the park was at a price and on terms that just were more aligned with a squeaky clean deal. So we didn't feel that they properly reflected the risks associated with the well. And so at that point in time, we're probably 6 to 8 weeks into diligence now. So this is probably late July, early August. We said, you know what, this park isn't for us. We did all this work and we had compiled quite a comprehensive diligence package. It's probably worthwhile to someone else who's more experienced and has dealt with these types of issues before. Let's try to wholesale this and shop this around and see if we can get paid for our time and recoup some of the soft costs. So we spent about 6 weeks from then through the end of October shopping the deal around, and we blasted everywhere. You may have seen some of my posts, right? It was out on Bigger Pockets and MHU forums, like really everywhere that we could get an audience. We let them know, hey, we've got this mobile home park. We've done all the due diligence. We put a sort of an offering memorandum together, or something like an offering memorandum, and spoke with about 40 different prospective investors, and took a lot of phone calls, answered a lot of questions, and ultimately nobody was interested at the price and the terms. So at this point, it's late October, and we've got this deal in our hands that nobody wants. We've thoroughly tested the market and really gotten a sense for the appetite in the market. And while discouraging, because we're trying to wholesale this thing and make some money, it actually was kind of encouraging, because now we had a lever that we could pull with the seller and say, hey, we spent a lot of time with your park. We know it and we're still interested. Here's our main issues though. And, good luck trying to get this price and these terms with the market, because we've just tested the market and there's no interest. So if you're wanting to close and wanting to close fast, you may as well work with us. And so that entered, round 2 of us being back interested and trying to renegotiate the deal.
Nice. Very nice. And before we run out of time, though, what'd you have to do to the well?
So we are currently drilling a new well.
Okay.
So we had a couple of avenues to pursue to get the well resolved. We do have city connections, so there's a municipal line that runs out right in front of the property. We can tap into that. But as a first lower cost alternative, we are drilling a new well. So yeah, we're in the process of doing that. We hope to finish that by the end of Q1. And if that doesn't work out, then we'll pivot and tap into the city line.
So did you find out like legally you wouldn't be responsible for anything that happened before this, or?
That's right. Yeah, and we actually were able to negotiate a warranty period as well. So not only would we not be liable for claims that were raised for things that happened prior to the transition in ownership, the seller provided a warranty for 8 months into our ownership period, such that if anything occurred, they'd be on the hook to take care of it and be liable for anything that came up. So
wow.
That was one of the things one of the points that we were able to get through the negotiation, which got us comfortable and, assured us that we could move forward and limit some of our risk.
Oh, that's a key point right there. And I mean, asking for a warranty. I mean, most people, there's times you don't even think of something like that, so I'm glad you brought that up.
Yeah.
But yeah, unfortunately we're going to have to move on, but I wanted to ask you, John, what's been the hardest part of the syndication business for you?
Yeah, I think just at least for us is educating interested investors and potential partners who aren't as familiar with mobile home parks and why they should pay attention and be interested. So again, that negative public stigma that I mentioned earlier in the show really overhangs, is pervasive and overhangs all activity related to it. So people don't want to live there, they don't want them in their communities, and they surely wouldn't invest in them. And overcoming that barrier, I think, has been a challenge, and just getting people to pay attention to you and then really appreciate the attractive economics of the asset class and be willing to invest either time or energy or their capital in the vehicle. So yeah, that's been a challenge.
How have you just quickly, how have you all educated people?
I would say that this, variations on this theme here this afternoon has been a way that I've done it. Look, the other way is you've got some pretty notable, successful investors that are in the business in a major way. So Warren Buffett, for example, right, owns Clayton Homes, which is the largest manufactured home manufacturer in the country. Also supports a major financing company of mobile homes. So he's got a vested interest in the industry, and it sort of signals to the market, hey, maybe this is a decent business, right? We've got Warren, who's been a successful investor, and he likes his business.
What's his
name? Similarly, Sam Zell. So Sam Zell, billionaire real estate investor, founder of the Equity Office, Equity Residential, the Equity Portfolio. He owns the largest manufactured housing REIT in the country, which is Equity Lifestyles, ELS. So he's in the business in a major way. So you've got these two public figures that, sometimes you can throw out those names and make the association, and then it's, okay, great. That's another tactic that I use aside from just walking through some of the points that I shared with you, and just the tangible aspects that are really appealing about the industry.
What's a way that you've recently improved your business that we could all apply to ours?
I think it's going on shows like these and talking to people and just sharing. I mean, as I mentioned, we got our first deal because we shared with people that we were interested in buying mobile home parks in the Carolinas and getting out. I'm not really a social guy. I'm introverted. I just prefer to, sit in front of spreadsheets and think and read. But forcing myself to get out and do things like this, be more public, go to meetups, go to conferences, and just share, hey, this is what I'm interested in, and this is what I'm doing, has really moved the needle, cultivating deal flow, helped us find vendors that we need help with, connect us with attorneys. I mean, it's just opened up a huge set of avenues just by putting myself out there.
What's the number one thing that's contributed to your success?
I'd say just continuing to slog it out, and the whole principle of compounding, right? So in the face of no material immediate benefit, just continuing to push through and to pursue consistent small action over time to snowball and has really led into meaningful progress.
Nice. Is there a need in your business right now that you'd like to let the listeners know about?
Sure. I mean, we've got 2 deals under contract now, and we'll hoping to scale the portfolio pretty significantly to include more mobile home parks in the Southeast and the Southwest. And to the extent that others want to learn more about it and or contribute their capital to some of our projects, we're definitely out of our own personal capital and looking to raise outside capital.
Nice. And how do you like to give back, John?
I like to meet with other prospective real estate investors and other investors in general. So I attend the Berkshire Hathaway annual meeting every year in Omaha in May. And in the past couple of years, I've extended invitations to just random people that I've met in conferences or have sent me emails, and just invited them and shared with them a world that was introduced to me and really created a lot of great opportunities. That's my way of giving back and just sharing, opening doors for others in a similar way that it was open for me, and perhaps giving them an opportunity to really dig in and create something that works out well for them.
Nice. Tell the listeners how they can learn more about you and your company.
Yeah, so we loanjunipercapital.com. We're out there on the web, and people can reach out to me, Jacobus at loanjunipercapital.com. Email is really best way to get in touch with me.
Awesome. So find a mobile home park, call John. Right.
You got it.
Awesome. John, thank you so much for being on the show, and appreciate you just
Whitney.
laying out just great detail for us to know about if we're pursuing mobile home parks. I hope the listeners will connect with you, and also go to LifeBridge Capital and connect with me, and go to our Facebook group, the Real Estate Syndication Show, so we can all learn from experts like John and grow our business together and take everybody along with us. So we'll talk to each of you tomorrow.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.